How's everybody doing? So today we're gonna talk about a good thing. We're gonna talk about option. I'm gonna give you the strategy how to buy call and put option, what you need to look for. So before we even start, as we always, let's pray, because prayer is the best thing. When you get to know how to pray and get close to God, He's the only one that can do good things for us. Let's pray. Heavenly Father, thank you for everything you have done for us. Thank you for the night. Thank you for the day. You are God. No one is like you, and no one is better than you. Here we are today, this morning. We come to you because you're the one that can give power. You give knowledge. Thank you for that. Thank you because you have been protect us, covers us. The blood of Jesus is great. The blood of Jesus has power because this blood has great power to deliver us. Thank you for the day. Thank you. May the trade be good in the name of Jesus Christ because he's great and he's God. Thank you, Jesus. Amen. Yes, thank you. Sorry. So, therefore, that's the way. Anything that you have to do or anything before you even start your day, you got to pray God. He has the power. Thank you. And may God bless you also, my friends. So today we're going to talk about good things. We're going to talk about the option, how to buy a call and a put option for those that doing option. I'm going to give you great strategy. I'm just going to share the screen so you can know if you want to download it or have it, or we play the video so you will know how to buy call options, what strategy, what technical analysis that you need to know. It's going to be very simple. We're not going to be too long for beginners and also for people that's been known already. This video is for you. So by the way, if you haven't been subscribed to my channel, just do a favor, subscribe, like, and share. So that way, whenever we get something, you will be known. So thank you for that. God bless you. Now, let me share the screen and I'm going to show you step by step when you buy a call option and also when you do a put, call when they start going up. And then when you do a put, when the stock is going down. So I'm going to show you that in a screen share so you can have a better view of what I've been talking about. So let's go there and we're going to talk about it. All right. So this is that way when you buy strategy to buy, call, and put. I'm going to give you this strategy today. So when you buy a call and a put, we have what you call in option. We're going to talk about option today. So in option, you can do a straight call and we could do a put down, but we have other strategy. We're not going to go there, but we just do the simple one, which is the call and put. When you buy a call, that means you expect the stock going up. That means stock going up, like an uptrend, whenever it's going to move up. So whereas when you buy a put option, you expect the stock is going down. That's the way. So whenever you buy the call, you put your option to go up. And whenever you buy a put, you put your option to go down. That's the difference between call and a put when you do option. So the best thing that you may do, you have to pick great liquid stock. buy call option. Don't do option with small stocks, like stock that not great stock. Always buy in the big, great, liquid stock, big company. Like first thing, you have to have your SPY open or your QQQ. You can have these two short being open because you know this SPY is the 500 company, so it's the basket. You can have this short open. You can open your short, your that's a technique I'm giving to you. You can have your SPY short open, or you can have your QQQ. And also you can trade them for option. But if you want to trade other stocks, you can have these two big basket open. You can have the QQQ open, your short, they are open in a separate, and you can have your SPY open. And then now you trade the stock. So you can have a look to see, because the SPY, which is the SP 500, is the basket where all those five companies, whenever SPY, the SP 500 is going up, most of the time, most of the stock is going up as well. Whereas whenever the SPY, which is the 500 company there, going down, most of the time, your stock to going down. That's why you need to first have your SPY open and your QQ2 open. And then you trade Apple, you trade NVDA, all those stock. You have, remember, you have to always pick big, great, liquid stock, not small, not low stock, big, great stocks. And then now you go to the option chain and choose, because they have a previous stock, more options, like the option chain. That's the first thing you do. And also you pick 1 to 2 weeks. When you do option, you can do it for 1 to 2 weeks expiration date. 1 to 2 weeks expiration date. When you do it for short term. So if you do it for short time, very short, you always pick the option chain and you do expiration for 1 to 2 weeks. All right. And then your strike has to be just out of the money. Out of the money, that means you do it out of the money, or you can do it at the money. Some people do it in the money, but the in, because we have what you call out of the money when you do option. You have in the money, and you have what you call at the money. Let me go there to show you. We have what called in the money, out of the money, and you have what you call at the money. You know? When you do option. In the money, so that means you buy in the money. In the money, most of the time, is more expensive. Expensive when you do option is more expensive. But your option will be even better because it's in the money. Out the money is less, very less expensive, is very less expensive. And at the money is less expensive than, is expensive than out of the money. But this one is more expensive than at the money. At the money, you buy it at the price itself. For instance, if the price is 130, you buy it at 130. In the money, if the price is 130, you buy it at 126 or 27 or 28 or 29 because you buy in the money. Out of the money, you buy further. That means you buy it, for instance, if the price is 130 and you buy it maybe to get to 150, 140, 135. So that means it's less expensive, but making maybe less money by the time you get there. This one may be faster to get there because you buy it in the money, and this one is at the money. That means it's a little bit again faster also to make some money. So you have a difference. You have what you call in the money, you have out of the money, and you got at the money when you do call options. So that's the way, my friend. And you always do it. Most of the time, you can do it for 1 to 2 weeks. If you do it for short terms, 2 weeks. But some people buy the call option or option for 3, 4, 5, 6 months. But if you do it for very short time, you always buy it for 1 to 2 weeks, and you can sell it the same day. You can sell it next day. You can sell it until Friday. It depends on up to you. But remember, option time decay. We have what you call time decay. So when times go fast, you can lose your money faster. As well, you can make the money faster too. It's a big risk when you do option. That means you have to know what you're doing because the money, what happened, your money can, let me see what I can do for you there. That means your money can go faster. Your money will, so that means because option, your money is a big risk. You can make the money, you can make the money faster. You can lose the money also faster because we have what you call time decay in the money when you do option. So what happened? The more the time go fast, your money move faster too, whereas your money go down faster too. You can lose your money. Is a options is a big risk when you do that. He has a big risk. That's why most people who don't know, they scare buying option. But at the same time, you can make money, big money faster, but you can lose big money faster too. So therefore, what you need to know your technical analysis very well. That's why I've been teaching you every day, giving some great technical analysis. And I'm going to give you some technical analysis, what you can look for in a very short time. I'm going to give it to you so you can know what to look for when you do a call, when you do your call option and put option. Because if you don't know your technical analysis, because your technical analysis, what is it? What is it? So is you have to know your technical analysis, your chart very well, how to trade. By the way, we offer a class also about trading. If you need to know more about your technical analysis, click on the link down there. We put a class for you. And also, if you need to know how to use TradingView, because if you're gonna do option, you're gonna trade, you need to have a great platform, which is TradingView is one of the great one. So we teach you the tool there, how to use those tools. And you need to know also about your candlestick. So we teach you step by step how to use your candle. Click on the link. It's only for $100 this class, because we just teach you how to use candlestick and also how to use the TradingView app. All those tools there, we teach you step by step. And we put a link for 15% discount for you to buy the TradingView app. So it's going to cost you cheaper with my link there. We put 2 links there. One is for the class, one is for TradingView to buy. Now, because you need to know your technical. By the way, we put a class also about moving average and MACD, because those things, you need to know them very well. Click on the next video and you can know. We put all those great videos for you there. Don't forget to subscribe. Thank you. Now, as we've been told you, it's a big risk. I'm going to give you some good technique what you need to look for sometimes. And what I'm gonna tell you, we explain that in our previous video. Look for those videos about MACD, everything about moving average. We have those there for you. Now, we have some simple trading rules for you. First thing, what you can do, when you buy a call, you have to look for, I'm going to give you just the technique. I'm going to read it for you. And then thereafter, maybe I will show you a little bit about the technique, but we have those videos about it. I'm just giving you what details you need to look when you do call option and put option. So first thing, we'll say call, that's for call, going up, put going down. Buy call, you have to, that's a simple rules you have to look always for. If you're not too good, just I'm giving you the simple, very simple trading rules. You don't rush, you don't go after the price, you don't jump, you take your time when you do option. So what you need to know, you have to look for what you call price break above resistance. Don't forget, I'm gonna show you to you. I'm gonna give you some technical. You know, in technical analysis, you know, we have what you call resistance. First, let me just remove this. Let me do it that another way instead. We have what you call resistance, and we have what you call support. So therefore, we call this one resistance. That's a technical I'm giving to you. When you do call option, what you need to look, I'm going to give you some explanation now. You have what you call resistance, and we have what you call support. I'm just giving you the simple rule that you need to look for when you do option. You just take your time, you don't rush. That's why you need to know your technical analysis. So what is it? You wait by call option if price break. So this technical I'm giving you, if you do, if for instance, you're gonna do call, you expect the price going up. That's mean when you do, remember I told you, when you do call option, that's mean you expect your stock moving up to make money. And then when you do put option, you expect your price, your stock going down to make money. So first thing I'm gonna give you to you about call. So when you buy a call, what you do as a simple rule, you expect the price to break above the resistance on volume. So what does it mean? So, you know, stock market always going, as I've been told you, going up, down, up, down, up, down, up, down. So what happened? The price start from here, that's a candle, and price moving up back here. And remember, this one is the resistance, and that one is the support. So start coming from back to that resistance, to that support there, and it goes to the resistance. We call that resistance. So what I've been told you, you expect now, you wait for the price, you don't buy call option. So if you buy, for instance, this is the candle here, we call that price because all candles mean price. So the candles go there, price moving from back there to the support and move down, move up there to that resistance. So you don't just jump on that price to buy call. If you buy there, what's going to happen if you just buy there? If you just jump and you buy here, so what might be happen? Price might be going back down here to the support. So what's going to happen to you? You're going to lose your money because you expect price to move up, and price don't move up, it goes down because you buy here at the resistance. You never buy at the resistance. You remember that? We've been told you that in our previous technical. You always buy at the support in the bottom, and you expect the price move up. So therefore, you don't buy there at the resistance. You buy, you sell. But what the technical told you, you have to wait for the price. This candle there, you see there, this candle here, you wait for that candle to break that resistance. So how it breaks, this candle cannot just hit resistance in the bottom. It has to go above that resistance like this. We call that break. And then it has to be closed, as you see that. A candle has to be closed above that resistance. So whenever price is breaking, now it has its chance to move up. You see, this is the rule. That's the first rule you have to look before you buy a call. You can do it either you buy it at the bottom here, you expect the price moving up, or you wait. You don't jump on it. If the price has already been going up, you don't just jump and follow it. You wait for now. When you get there to that resistance here, you wait for it to break down, and this candle break. This candle, you see that go up and break and close above that resistance. Now you have a better chance to buy a call at that resistance here or at that candle above that candle here. You buy it above this candle when it closes. And therefore, again, what you do, what you have to look again, after price, we see, after price break above key resistance, which is price break above this key resistance on volume. That means what you have to, what they mean to you on volume. You see, the volume is back there. You know, volume is there, the bottom. I will show you that in a wheel chart later, maybe in next video. Those are the volume. So when the price is breaking above back here, so you have to see also the volume. We call that back here. Let's call it volume. I just give you a explanation in myself as a short. We call this one back there volume. So what does it mean? You need to see the volume get very hot. So you have to see volume like this, big. So as soon as you see volume, that means a lot of buyers get in. So when you see volume is big, that means buyers get there and the volume very high. That's the second thing. First thing, you wait for the candle to be weak. That's the first one. That's the first rule to buy a call. And you can wait for the buyers to get involved in volume. So this volume get high. And secondly, RSI is rising above 50. You can see that above 50. So RSI, what is the RSI? RSI, we call this one back there is RSI. You know, I explained that. If you need to know more about how to use RSI in MACD, we have another video. We explain it step by step. We put it there for you. You can watch it. So what is RSI? RSI has like a two line in it. On it, we have what's called 70 is 3 lines. We have the middle line called 50. We explain that we're not going to go too far on this. And we have another line down called 30. So the 70, whenever these two lines, which is the two moving average that's above, we have two moving average above in the middle of RSI. Whenever this line, and we remember that we have the middle line here, and whenever the moving average is above 50, you have this line, which is this moving average here, has to go above 50, which is the middle. So the 70 is for overbought, the 30 is for oversold, and the 50, whenever the line, which is the two line, we have inside the RSI, that means the RSI line that's inside, whenever it's break above 50, that means stock has a chance to move higher. So first thing you have to look for the candles break resistance and the RSI break above 50. That means that's a good sign for the stock to move higher. And also, you have to look for the MACD cross. That's optional. So if you want to look at it, but as soon as you have RSI is okay. So MACD, so what happened to the MACD is another line we call there MACD. Let me just put this as a MACD for you. Let me just erase there to see for you, to add MACD for you. So what is it? MACD is has another two line. We wait for MACD has two line inside. We have this two line inside. It's always two moving average inside this MACD line. This is MACD line inside. So we wait for the MACD line we call this MACD line. You wait for instance, this one is a 2 line inside. So what you have to wait, you will wait for the MACD line to cross above the signal line. We have the signal line, which is this one, and we have the MACD line. So you have to wait for the MACD line cross above the signal line, and you wait for the RSI, which is the line, cross above the 50, and also the volume. So you have 3 options. That's not the way it works. The 3 options, you have to wait for the price break above key resistance, which is at just 2, and you wait for the RSI rising above 50, and the MACD cross, which is the MACD line cross above the other line, which is the signal line. So therefore, these are the 3 things you have to wait, as I've been taught you. So the price break above, as you see, so candles break above, like you see, break above resistance, and the RSI line break above the 50, which is the middle line, and the MACD line break above the signal line. So if you can have these 3, 1, 2, 3 thing happens, that's the best time to buy a call option. All right. So therefore, whereas for the put option also, if you do a put, when you do a put, that means the stock is moving down. So it's going to be the reverse when you do the put. Remember, the put option now for the put, what you do is the same thing now. You have resistance, you got support. So, the price going up, down, up, down. So back there is a resistance. Remember, the resistance is back there is support. So what you have to wait, you wait for the candle to go back there to that support and break support. It's the same thing. Before I told you, candle has to break resistance to buy a call. Now, candle has to break down the support to buy a put option, to do a put, because if you go there, you just jump, it might be reversed back up. So now you're going to lose money. So therefore, what you do, you wait for when it starts move back down to that support, you wait for the candle to break this line here, break it. So it give you under the candle down there and it close like here. It's closed here. Now you can buy your put option because it's closed. And also, whereas, again, now I'm going to wait so you can have space. And then the next step now is you wait, you have the RSI. So the next thing you do to do the put, you look for the RSI as I've been told you. And this line, we got 3 lines inside the RSI, as I told you. We got, again, the 70, we got the 50, and you have the 30. So as I told you, the 70 is overbought, the 50, that's the main thing you control to buy, and the 30 is the oversold. So meaning, now you wait for these 2 lines, and remember we have 2 lines inside the RSI. So you wait for the line, this line, to break below the 50. Before, for the call option, I told you, you wait for the line to break above 50, the middle one. Let me erase that so it's not 150, it's 50. So we wait for the line to break 50 above to buy the call option. But when we do the put now, you wait for the line now to break down the 50. That means this 2 lines will come down like this. That means now is a good time to buy the put. And whereas for the MACD now, we have this line inside the MACD. That's a MACD line inside. And we have 2 lines inside the MACD. Okay, we have 2 lines inside the MACD. And we wait for the MACD line. This is the MACD line. This is the signal line. So now you wait for the signal line now to cross down the MACD line. And then whenever the signal line cross down, because we know when the MACD line, which is the black line, when it's crossed above the signal line, that's the time you buy, you call. Whereas when you do a put option, you wait for the signal line now to cross below the MACD line. So when the signal line cross below, that's the time you buy. So you have those three options. Once you have those three things, you'll be good. You're ready to do call and put. So I'm gonna project them for you. So I just explained it to you. And if you need to know more about it, we have a big video about MACD. We explain step by step how to use MACD and RSI. So I just give you a review about it. Now, simple trading rules to do a call. Price has to break above key resistance, as I show you. And RSI is rising above 50. And MACD, that's optional. MACD cross over line of signal. And to do a put now, is reverse now. It's the same thing, but the reverse side, you wait for the price break below support, as I told you, support, break below support. And RSI is falling below support again, below 50. And trending is clearly bearish, low high. MACD cross below signal. So signal like cross below MACD, but that's optional. As soon as you look for these two, that's the best thing. And your exit plan can be target, because you have to have an exit plan, can be target 20 to 50%. As soon as you make 20 to 50 gain, you get out. You don't have to wait. And also, you have to put your stop loss. Remember, your stop loss can kick out, but you put your stop loss that help you don't lose that much money. Your stop loss can be between 10 to 20%. And use always limit orders to control entries, exit. That's a simple rule. I give you quick technical today for option. And also, the last thing I'm going to give you, you can use another strategy beside using price break above RSI, those things. You can use another technical. All those things we've been explaining in our video about MACD and EMA. So by the way, if you like this video, don't forget, subscribe. If you get until there with us, subscribe, like, and share. And don't forget to check our link for the class. We offer you a great class, very cheap. Now, another technical that you can use also, you can use what you call your short indicators, EMA, which is exponential moving average, 9 and 21, with RSI and MACD to buy a call. So what I can explain to you about this, and we do video also already about it. So what we can do about this one, we have the moving average, which is the 9 moving average. We have 9 moving average, and we have 21 moving average. That's a moving average. Moving average or exponential moving average. We use the exponential because it's very weight, very strong. Exponential moving average. So how you do it? The 9 moving average has to be above the 21. Small number, always. Small number has to be above big number. That's his first step. That's the first signal you have to look for when you do a call option. Your 9 moving average, you see, you use 9 and 21. But first thing, the 9 moving average has to be above which is one? Has to be above the 21. And you use your RSI, as I've been told you again. So your RSI line, you have 70, you have 50, you have 3 lines, and you have the 30. So your RSI line has to be crossed above the 50. So you have to look for those two things. When you put your moving average, your 9 moving average has to be above the big number, because you have to add those two lines, the 9 moving average and the 21 moving average. So the 9 moving average has to be above, stay above the 21, and your 20, when your RSI has to be above the 50. That's your big range. And your MACD bullish crossover. So therefore, your MACD line, as I've been told you, your MACD line has to be crossing above the signal line. Those are the three big things. First thing, your 9 moving average has to be above 21, and your RSI, which is the line, has to be crossing above the 50, and your moving average, which is the MACD, has to be crossed above the signal line. So as you can see there, use short tab, as I've been told you. If you need to know more about, just look for it. Your EMA 9 and 21, you look for the RSI and the MACD. So your 9 moving average has to be above the 21, your RSI has to be crossed above 50, and your MACD line has to be above signal line. That's a winner. And you can wait also for the price bounce at EMA. Also, RSI cross above 50. So how it goes, because most of the time your EMA, your moving average, use as your support or resistance also, because most of the time you use your moving average can be used as resistance and support. You use them also as a support. This is your moving average, and I can show it to you in the short if we have more time. So your moving average is like that. Is a 2 line, is the 9 moving average, and we have the 21 moving average. So therefore, your 9 moving average, this one, start moving, going up, down, up, down, up, down, up, down. So you can wait for the price to go and bounce there at the 9 moving average. When it sit there, that represent a support. This is what they mean. So your price has to be bounced at the support, at the moving average, because remember the 9 moving average represent a support, so it can use as a support and resistance. So therefore, you wait for the price to bounce back there. When the prices just sit there, you can buy now. You can have a chance to buy because it sit at your support, and boom, it move back. That's the way. That's why they mean your 9 moving average. Your price bounce at EMA, sit there, and RSI cross above 50, as I told you, and you make sure the RSI line cross above 50. That's a good signal. And also, MACD bullish crossover, and price sentiment SPY is also bullish. Remember that we told you have to look for SPY and QQQ. So make sure the SPY is bullish, and whatever stock that you buy will be going up too, because most of the time SPY means the SP500 is a big basket. So as you can look for those things, you have a chance to make money on bullish. Now, when you do the put now, you have to wait for the price reject resistance. For instance, again, that's the resistance here. So resistance here and super back there. So start going up, down, up, down. So what they told you here, you have to wait for the just price reject EMA resistance to buy a put. So therefore, so what happened? Price, when you go up to that resistance, it doesn't break. So if it's break, you cannot do a break. You cannot do a put. So you have to wait when the price go back down and it goes there to that resistance here, because that resistance. So price has to be rejected there and that break, and it's go back down. That's the time you do a put. And RSI drop under 50, as I've been told you. So the RSI, 2 line. So the 50 here. So line drop below the 50 here. Doesn't go above. When it go above, that's called. When it's go below 50 for RSI is a put. I understand now. And MACD bearish cross over. So the MACD line now, this is the MACD line, and this is the signal line. So the signal line now has to cross below the MACD. So that's the way. So therefore, the signal line now has to cross above the MACD. So whenever the signal line is crossed above the MACD line, that's the time you blow a put. All right. So as a review, you use short tab, EMA in 921. So your 9 has to be above the 21. Your RSI has to be above 50, and your MACD has to cross the signal line. That's a big entry. Or you can do a price bounce at the EMA, at the support, which is, the EMA represents your support, so your moving average. So the price has to be bounced back there at the support, and RSI cross above the 50, and MACD line cross below, above the signal line. So for the put, your price has to be reject back there, or instead of break above is reject, and RSI has to go cross below 50, and MACD line, the signal line, has to cross above the signal, above the MACD line. The signal line has to cross above the signal to do a put. And I'm going to give you a bonus. Those are the ticket good stock that you need to trade. When you trade, you don't trade the small stock. You can trade those stock. I'm giving you great bonus to the big stock. SPY, QQQ, Apple, Tesla, NVIDIA, AMD, MST. You can also start trade Meta. So those are the big stock. You see, that's why they give you a big stock. So Tesla is a big one to trade option. SPY, you see, they give you good, they are those volatility. You see, those are the big stock. When you trade option, you don't trade the small stock. So I give you the big technical today, my friend. Help me. If you like this video, just do me a favor, subscribe, like, and share. And next time we can come up and give you a better view. So this is technical. If you need to know more about this video, just replay it, understand it, and don't forget you can download a print those things so you can look on them for yourself. And also we have videos step by step that explain how to use MACD, RSI, and we put 3 those main video for you. The first one, how to use RSI, how to use MACD, and how to use moving average. Because those 3 things, if you can get them very clear, you can do call and put option. Don't forget, it was Harry. We're gonna keep in touch. God bless you. See you. Ciao, ciao. We're gonna keep in touch. Don't forget to subscribe, like,